Lately, more and more banks across the United States are shutting down. But why is this happening, and what does it mean for you? Millions of Americans are worried that their local branch might be next to close, forcing them to travel 40, 50, even 60+ miles just to find the nearest one. That's a serious concern, especially for people in rural areas. And the pace of these closures? It's picking up fast. Today, we're breaking down why banks are closing their doors, what's really driving this trend, and why you don't need to panic, thanks to digital banking options. I'll walk you through everything you need to know and how to be prepared. But first, if you appreciate these daily updates, do me a quick favor. Tap that like button. It only takes a second and helps a lot. Alright, let's get into it. Yes, bank closures are real, and accelerating. It's true. Banks are closing branches across the country. But not because they're going out of business. In most cases, banks are shutting down physical locations to cut costs and operate more efficiently. Here's a real example. In Q1 of 2025, the number of branch closures spiked. According to reports, 148 branches shut down during the first quarter alone, compared to just 21 closures in the last quarter of 2024. Take TD Bank, for instance. They recently announced 38 branch closures in a single month. Locations in states like New Hampshire and Maine are being shut down as part of a larger efficiency push. Automation is taking over. Walk into some modern banks today, and you might not see a single person inside. Instead, you'll find multiple ATMs, touchscreen machines, and maybe a phone in the corner to call a banker, if you want to make an appointment. Banks are going fully digital. They're trading expensive real estate and staffing costs for small ATM kiosks, pop-up locations, and online customer service. It's all part of the broader trend toward automation and digital banking. Economic stress is also a major factor. It's not just technology that's changing things. The economy is also playing a huge role. Here's what's happening. Household debt is rising again, reverting to pre-pandemic levels. During the pandemic, stimulus checks, PPP loans, and enhanced unemployment helped many people pay off debt. But now that support is gone. Student loan repayments resumed in late 2024, and delinquency rates are climbing fast. Credit card delinquencies are also rising. And auto loan defaults, especially in the subprime market, have reached record highs, even worse than during the 2008 financial crisis. With fewer people qualifying for loans or even walking into branches to apply, banks are scaling back operations. The shift to online banking. The good news? You don't need to rely on physical branches anymore. Today, you can do almost everything from your smartphone. Deposit a check by snapping a photo. Transfer money instantly. Order checks delivered to your door. Schedule a virtual appointment with a licensed financial advisor, often without ever visiting a branch. Sure, there are still a few things like cashier's checks that require an in-person visit. But even then, many banks allow you to schedule appointments online to streamline the process. Loans, mortgages, and even car buying are now online. Need a home loan? Most of the process can be done entirely online. Upload documents, sign forms, and get approved digitally. Buying a car? Platforms like Carvana let you shop, finance, and even trade in your old vehicle online. They'll deliver it to your driveway. While the rates may not be the best, the convenience speaks volumes about where the industry is heading. In conclusion, why are banks closing? They're cutting costs and adapting to a digital-first world. The economy is tightening, and demand for loans is slowing. Consumers are embracing online banking, reducing the need for physical locations. While it's inconvenient for some, especially in rural areas, the banking system is evolving, not disappearing. And as always, I'll keep you updated as more developments come in. If you found this helpful, consider subscribing for more updates on finance, banking, and the economy. Thanks for watching, and I'll see you in the next one.